Going. Okay, this is Rhonda Thomas, and we are working on financial accounting. This is the last day of class, and we are going to give you a run through of the project. The project focuses on chapters 1 through 5. So I know that it's been a little while since we've reviewed some of that. The project is actually on Cengage. However, I've got 3 different supplements here for you to use. They are all Excel spreadsheets. This is for the first one. This is for the second one. And then the third one doesn't require a spreadsheet. So what I'm going to do is I'm going to open up each one of these. Now you can either use them in Excel, or you can print them and then just write on them. So that's up to you what you end up wanting to do. But the first one is T accounts. So we're going to look at a problem in chapter 4. It's called chapter 4, 5A. Okay. And then the other one that goes with 4.5a is this period in spreadsheet, which I'm going to open it. So I'm going to download it onto my computer, and then I'll be opening that here in just a minute. So I would recommend that you download all of these Excel spreadsheets and use them to your advantage, so you can keep track of what you're doing in these problems. So if you recall, or let me help you recall, chapter 1 through 4 took us through the accounting cycle. Okay, took us through accounting cycle. So let me get these pulled up here, and I need to download this. And then I'm going to open these, and then I'm going to open my project in Cengage. Okay, I'm going to go open my project in Cengage, and I'm going to do my project, which you'll get different numbers, but I'm going to try to help you with how to take care of some of it. But you're going to try, I want you to do your best to try to apply what we've learned this semester. Okay, so we have 3 problems in this project. Let me show you what they are. The first one is problem 4.5a, and this is completing the accounting cycle. Okay, the accounting cycle. And we'll review real quick here in a minute what those steps are. Now, what I'm going to do, there's quite a few windows to open up. I'm going to get rid of, okay, so I'm just going to open up everything. Just open up everything, and then I'm going to stack them. Here's how I do it. You do it however works for you. Okay, I like using this. Looks like a hamburger. And so we start with the instructions. If it were me, I would print these. In fact, I think I'm going to print these instructions, and then I'll have them to read as we go through this, so that we can move along a little better. So if you'll bear with me a minute, I'm going to go print that. Okay. And we're going to go through the accounting cycle. Okay. We have these 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. We have 20 transactions to journalize. Okay. But we're going to use T accounts to help us figure out what's going to be debited and what's going to be credited. We've got a page 1 of the journal and a page 2 of the journal. Okay, then we're going to post all of our entries to the ledger. Once we get them all posted to the ledger, we're going to prepare an unadjusted trial balance. And we have a spreadsheet to use to help us once we've gotten all of our entries in, and I'll show you how that goes. And then we have 1, 2, 3, 4, 5, 6 adjustments that we need to do at the end of July. Okay, at the end of July, by the way, this is for the month of July. They started a consulting business on July 1st. Okay, and so it's called Diamond Consulting. And so here are the journal entries that go on page 1 of the general journal. Here are the entries that go on page 2 of the general journal. We are going to post every journal entry to the ledger after we're finished with everyone. Okay, so that way we stay on track with what we're working on. And then once we get all of our transactions in, we will prepare an unadjusted trial balance, which will include that spreadsheet. And then we have 6 adjustments that we need to do at the end of July. And then there is the spreadsheet. Well, I've given you a spreadsheet in Excel. If you're not very comfortable with Excel, you could print it and then just write it in if you wanted, but I think it's worth doing. So then we're going to journalize these 6 adjusting entries as of July 31st. Then we'll post the adjusting entries. Okay, so these are the adjusting entries. We're going to post those to the ledgers so that all the balances that those accounts involve get a new balance. Then we'll do our second trial balance. It's called adjusted trial balance. Our first one is unadjusted. Then we make adjustments, and then we do adjusted trial balance. It's the numbers from the adjusted trial balance that we will then prepare an income statement, a statement of stockholders' equity, and a balance sheet. Now, the good news, excuse me, is we don't have to do a cash flow statement. So that wasn't part of chapter 1 through 5. So you don't have to worry about that one, even though it is required as well. And then once we're finished with, so here are the 10 steps. Yep, here are the 10 steps, according to this book, of the accounting process. So once we're finished with creating the financial statements, then we are going to look and see what needs to be closed. Revenues, expenses, and dividends all get closed to 0 after we've done the financial statements. Now, and then we're going to prepare a post-closing trial balance. So number 3 is our first trial balance. Number 7 is our second trial balance, and number 10 is our post-closing trial balance. Here is our chart of accounts. I have put this in to the spreadsheet on the T accounts. So if you'll give me just a second, I have got these ready to go here. So here are the T accounts, and I'm going to use them for completing the problem that I have. Okay, so I want you to notice that if you open this and use it yourself, you have to enable editing, and then be sure you go to the first tab. Let's double check that I have all of the accounts that we need for doing the problem. Okay, so we kind of want to make sure. I did this yesterday, and I don't want to not have an account that we need. So what I did was I took the chart of accounts here. Let me refresh this. Hopefully it'll stick. Yeah. I'm going to move that over, and I'm going to move this over some. Okay, so this is the T accounts, right? We've been using T accounts pretty much all semester, and I'm going to go ahead and open my instructions, chart of accounts, and I thought I could get rid of these. Hang on just a second. Here's what I would recommend so you don't have so much open. I would recommend the instructions, the chart of accounts, and the general journal and the general ledger. Let's start with those four. And I'm going to stack them. Okay. And then I'm trying to audit if I've got all the right accounts. So we've got a cash account. We have accounts receivable. We have supplies. We have prepaid rent. We have prepaid insurance. We have office equipment. We have accumulated depreciation for the office equipment. Those are all our assets. And I did put whether it has a debit normal balance or a credit normal balance. So the only asset that has a credit normal balance is accumulated depreciation for the office equipment. Then we have three liabilities. We have accounts payable, salaries payable, and unearned fees. Okay. Then you got to go to the next tab here. So let me make this a little bit smaller. All right. And so let's just keep going. We've got common stock. Yes. Retained earnings. Yes. Dividends. Yes. Actually, that ought to say cash dividends, but they didn't name it that. So I'm trying to follow the problem. Fees earned is our one and only revenue. By the way, dividends is the only equity account that has a debit normal balance. Then come our expenses. Our expenses all have debit balances, salary expense, rent expense, supplies expense, depreciation expense, insurance expense, and miscellaneous. Okay, so those are all there. Okay, so let's go ahead and get started. I'm going to go print my instruction list, and that way I can read from it without scrolling up and down so much. Okay, so let me go do that. You take a look here, and if you want to follow with me, otherwise I'm making the video. So just a second, I'm going to pause the recording, and then I'm going to turn it right back on. So just a minute. Okay, we're ready now. Once again, I have printed these instructions that you see here on the screen. So I may not scroll back up all the time. You're going to get different numbers than I will, but I am going to do a problem so that you have something to model after. And like I said, I think doing the T accounts will help you figure out what's going to be debited and credited and make sure that you keep track of what you're doing. And then we're going to use the period spreadsheet, which I have all three of these open, I think. Or I just have two open right now. That's fine. All right. So here's what we're going to do. We're going to try to make a process out of this. So I'm a firm believer in doing a process. You do this, the first step, second step, so forth. So the first thing I want to do is go down here to the general journal. The general journal, our first date is July 1st. Okay, I've got a ruler. Yep, I get that technical because you just want to try to stay on track. I also plan to cross off the transaction that has been completed. That way I know I did it. All right. And what we're going to do is we're going to put the date in first. Then we're going to evaluate what accounts are going to get the transaction so that we can get our debits and credits going. And then we'll make our journal entry, and then we're going to go post. We're going to go post after every journal entry, because in the real world, you post a journal entry pretty much, and pretty quickly after you do it, so that it affects the accounts the way that you want them to. If you don't post after you have done a journal entry, then it's like nothing happened. All right, so we're in the journal now. Let's put July 1st. Okay, that's the first date of this business getting started. It says this is a diamond consulting business, that they went from being part-time to full-time. All right, so here's what number 1 says. You'll need to look at your numbers, okay? Because I have different numbers. The following assets were received from Steffi Lopez in exchange for common stock. So she's bringing cash with her. All right, so cash is going to go up, and I've got $14,000. And okay, and if you want to put a 1 there, that's fine, or because there's 20 of them, okay, 20. So I'm going to put a 1 beside that, so we know that goes there. What else did she bring? She brought $20,800 in accounts receivable, so we want another number 1 there. Okay, and supplies of $3,100. So we're getting a couple of different debits here. And a lot of times a business that already has been in operation, but now is just starting over with a different business or a partnership or something, they bring a certain amount of assets with them. So we've got 14,000 in cash going up, accounts receivables going up $20,800, supplies is going up $3,100, and office equipment is going up $7,000. Well, if you add all of those up, okay, because the credit is going to be to common stock, okay, common stock. So what I'm going to do is I'm going to say equals, and I'll put a number 1 beside this so that I know it goes with those other 3 or 4. Yeah, they brought 4 assets with them. So we'll say equals, and I'm going to go back to that other page, and I'm going to say this cell plus, okay, so plus, hold on, this cell, where am I here? All right. Just a second. Let's start over one more time. Okay, so I'm in common stock. Once I have my cursor in the cell where I want the amount to go, I click or I hit equals, and then back to the other tab. We want cash. We want accounts receivable. Now you can add this up separately if you want. Okay, so, and I'm not getting, okay, hang on. Still not getting equals. This other 14,000 plus, okay, plus accounts receivable. Just a second. It's giving me fits plus. Okay, I may have to add it up right here. That's fine. I'll just add it up right here. So what I'm going to try it one more time because it should reference that other page. So equals cash, and then I want plus accounts receivable plus supplies plus office equipment. Now let's see if I got anything with it. Okay. I guess it didn't like it. Okay, well, you should be able to do that. I'm probably just not. Just a second. I'm going to try one more time. Equals. Back to the other page. We want this amount plus this amount. Nope, it didn't stick. Hang on just a second. I think I know what I'm doing. Just a second. I haven't had this kind of trouble. Yes, I have all semester. Okay, so equals back here, this number plus, Okay, I think I need a shift. Just a second. It's not cooperating. Equals. That. Okay, and then we're going to add. Okay, all right. Well, I'll just add it up on this side for right now. For whatever reason, things aren't working the way I want. So equals 14,000 plus, that's the cash, accounts receivable, 20,800 plus 3,100 plus 7,000. And I'll hit enter. All right, so there is the common stock. So let's go ahead and put these in. So cash is 14,000. Okay, just a second. Oh, that's the post reference. Of course. Sorry about that. We won't use that until after we're done posting. So we go here, 14,000 and accounts receivable. Okay, and it gets a debit of 20,800. Supplies. And if you want to copy and paste the names, that's fine, but I can type usually faster than doing that. $3,100. And then equipment, office equipment, okay, worth $7,000. And then common stock. So this is the first opening entry. 44,900 is what I got. Okay, so, and once again, anyway, all right. So now we're going to post this. I would go to each account separately. So go to the ledger here. All right, and I'm going to move this over some so we can get a better picture of the ledger. Okay, here's what the ledger looks like. We've worked with one of these before. I'm going to go to cash and I'm going to put the date in, July 1st. It's coming from page 1 of the journal. We're making cash go up 14,000, which means its new balance is 14,000. All right. Now I'm going to close this. And I'm going to make this smaller. Hang on. Yep, so we can see it. All right, we've got cash open. Now that we're done with cash, I would close it so you don't put something in the wrong spot. All right, here comes our first entry to accounts receivable from the general journal, page 1, $20,800. And then that means the new balance in accounts payable is $20,800. Okay, we're going to close that, go to supplies, put the date of July 1st, page 1 of the general journal. We're going to debit supplies for 3,100, which gives it a new balance. So this is a brand new business. So, and then we're going to go to office equipment that they brought with them. Okay, page 1 of the general journal. $7,000 worth of office equipment, which means we then have a balance of $7,000. I'm going to close that. My last account to be entered in is the common stock. So July 1st, post reference page 1 of the general journal. This is going to be a credit of $44,900. And the new balance is $44,900. Close it. Now that we have closed these, I am going to go up here and put in their account numbers. Okay, so we've got 11, 12, 14, and 18. Okay, so putting in the numbers indicates that you have posted these. And then this one's 18. Oops. And I think this one is 31. but I can go back up and look. So 31 is common stock. Yes. Yes, it is. Okay. So we've just journalized our first transaction. And we are going to move on to the next. Okay, move on to the next. So, hang on just a second. Okay. We're ready to do our next transaction. Okay, so we'll try to move it along a little bit here. But this is to make sure that you understand the 10 accounting cycle steps a little better. Usually it helps to do something like this. Okay, so I wish I would have had the chance to do this. So now we are ready for number 2. Okay, so the second one is also July 1st. So I'm going to go put that number in and then I'll read. Okay, so July 1st. That's fine. Here comes the transaction. Make sure you're looking at your amount. It says paid 2 months rent on a lease rental contract of $6,000. So if you're going to pay something, cash goes down. Okay, so we want to go back to cash. So cash is going to go down. Mine is $6,000. And we're going to put that in prepaid rent, I believe. Prepaid rent. Because that's, yep, paid 2 months rent. So we are putting that in another asset. So the $6,000 gets debited to prepaid rent, but the paying part gets credited to cash. Okay. So I think we're ready to make our journal entry. So let's put prepaid rent, $6,000, and down goes cash. Okay. And then we want to post this. So we go to prepaid rent first. Okay. Prepaid rent is number 15. This is July 1st as well. And this is an asset. It's coming for page 1 of the general journal. $6,000, $6,000. Now that's 2 months worth of rent. Okay, 2 months. And now we're going to cash. Okay, cash is also going to have a second July 1st item. Okay, credit this time. Now, 14,000 minus 6,000. You've got to kind of keep a running total of your cash. This cash is going to be really busy. Okay, I got $8,000 now. When you subtract what we just did, close the ledger, close it. Now we're going to go up here and put in the post closing or the post reference for each of these. So prepaid rent, I believe, is 15 and cash is 11. Okay. All right. Our next date is July 2nd. So let's put July 2nd, and here it comes. Pay the annual premiums on property and casualty insurance policies, $46.20. Okay, so we're going to pay $46.20. Oh, and I forgot to put number 2 here. And number 2, hopefully that will help. All right, so now this is number 3. So anytime we pay something, we make cash go down. Number 3. And what are we buying? We are paying for annual premiums. So this is prepaid insurance. Prepaid insurance of $46,200. Now this is for a whole year. $46.20, sorry. $4,620. Be sure you watch your numbers. So now we have a debit to prepaid insurance. Okay, and I think that's 16 for $46.20. Oop, I don't want to put that reference there, not yet. No, I'm messing up the steps, and then cash is going to go down by 4620. Now we're going to go to the prepaid insurance ledger. Prepaid insurance ledger, and this is July 2nd. Post reference page 1 of the general journal for 4620. Now the new balance is 4620. Close that account. Go to cash. This is the third entry in cash. Make sure you're following along from page 1. Down it goes, 4620. So we have a new balance of 8,000, and I subtract my 4620. I get 3380 as the new balance in cash. Close it, and now let's go post reference our entry. Post reference. So prepaid insurance is 16, and cash is 11. Okay, that's our last step to prove that we're finished with a transaction, is to post the references. Okay, another July date, number 4. This time, we're receiving cash from clients as an advance payment for services to be provided and recorded as unearned fees, $5,000. So what's coming in? Cash. Okay, so now let me go to cash. And on this side, we'll put number 4. Since it's the 4th transaction, $5,000. And why? Why are we getting that? Because customers are paying us before we do a job. And when we pay before we do a job, we have to put it in a liability, which is unearned fees. So we have a debit to cash. Okay, so let's put that in, of $5,000, and unearned fees, which is a liability that we owe a job. We owe this job to a customer. All right, let's go ahead and post to the ledger. Let's go to cash. This time cash will be going up. Okay, so this is July 4th. Okay, page 1. Make sure you debit cash. Make sure you add cash to the total you just put in. 8380. That's what I got. Close cash. Go down to unearned fees. The date is July 4th. Page 1. Let's make sure to put it in as a credit of 5,000. And so now the new balance is 5,000. Close, unearned fees. And now we're ready to post our reference saying that we have posted that transaction. So unearned fees, I've got to look at the number. Unearned fees is 23. Pretty soon we'll have most of our numbers up here. Okay. Our next one, we'll be checking our work here in just a minute. Our next one is July 5th. Okay, July 5th. You should be on line 12. Okay, line 12. It says, purchased additional office equipment on account from Office Station Company, $6,500. So what are we getting? We are getting office equipment. Okay, so this is going to be transaction 5. Okay, and we are purchasing $6,500, but it's on account. On account. Didn't say it was a note. So if it just says on account, then it just simply goes in accounts payable. So we have a debit of office equipment. All right, we'll go look up that number here in a minute. 6,500, and then accounts payable. Okay, we're ready to post now. So now let's go down to the office equipment ledger. Office equipment is number 18. So when we go back, okay, this is the second entry because she brought some with her or him. on the first day. This is July the 5th from post reference page 1, and we're adding to 6,500. So now we need to take 7,000 plus 6,500. So now we have 13,500 in office equipment. Okay, and then now accounts payable. Okay, the date is July 5th. From page 1 of the general journal, this is going to be a credit because we owe on what we just purchased in office equipment, and make sure you go to the credit column for both the entry and the balance. Now close it. Now we're going to put in the account numbers for a post reference. So this is 18 and this is 21, I believe. All right. Our next date is July 6th. Okay, July 6th. It says received cash from clients on account. Okay, received cash from clients on account. Okay, so when you receive cash, it goes up. And I want to make sure. Okay, so this is number 6. Okay, this is number 6. So cash is going to go up here by $15,000 for me. And where's that coming from? That is coming from, remember, there was already a balance sitting in accounts receivable from the very first entry. So now 15,000 is coming in from customers who we have on account. So we're going to get a debit to cash and a credit to accounts receivable. Now, normally accounts receivable will have the name of the customer on there, but in this case, they're not. But that's okay. Accounts receivable. All right, now we're ready to post. Go to cash. This is going to be an addition to cash. Okay, and this is coming from July 6th. Dates are very important. Page 1 of the general journal. We're making cash go up 15,000. So now we need a new balance. So I take my old balance that I have calculated, right? I have 8380 plus $15,000. I got 23,380. Okay, that is from the cash. Now go to accounts receivable. You'll see we already have a debit balance. So this is July 6th, July 6th from page 1 of the general journal. Now we're going to make accounts receivable go down. So we need a new balance. So whatever's sitting there, subtract. You'll need a calculator handy. Okay, $5,800 when I subtract the 15,000 from accounts receivable. Okay. Now we're finished with posting that journal entry. Now it's time to put in the account numbers. Okay, so here we are. Cash is 11 and accounts receivable is 12. And now we're ready for another transaction. So then on July 10th, it says paid cash for a newspaper advertisement. So I believe that we have an advertisement expense account. So you're going to need to go to the second. Okay, hang on just a second. I want to try something. Okay, I'm going to try that to view normal. And we'll view normal. Okay, but I'm going to make this a little bit smaller so that we can see it. What have I got this one on? I got this one on 70 and this one on 70. Okay, so do we have an advertising expense account? Because we cannot. Okay, advertising expense. We cannot put anything for newspaper advertisement. So I'm not seeing an advertising expense account. So I'm going to put it back over here. Oop, where it goes, maybe. Oop. I keep forgetting I have two screens. And I want this beside this. So I've got to move this over. Yeah, okay. Now I think we're in business. All right, so let me just check before I screw up. Okay, there is no advertisement expense. So guess where we have to put it? We got to put it in miscellaneous. Okay, now normally you wouldn't, but we don't have any place to put it. Okay, so all right. So this is the seventh entry. Okay, this is the seventh entry. Yep. So down goes cash. Okay, so we're going to, this is number 7. So we're going to put the $400 in miscellaneous because we do not have an advertising expense account. But if we see ourselves paying quite a bit for advertising, more than likely there will be one in the future. But we don't create any accounts doing this. Okay, so cash is going down and we cause miscellaneous expense to go up. Okay, and now let's put this in our journal here, and I'm going to squeeze this over so we get more room. So we're ready to make our July 10th journal entry. So we'll put miscellaneous expense. Yes, you have to spell it out. $400, and down goes cash, $400. Okay, we're ready to post. Go down to miscellaneous expense. It should be your last one. Let's put in July the 10th, page 1 of the general journal, $400. New balance is $400 because it's an expense. And then we're going to credit cash for paying for that advertisement. Yep. So July 10th, page 1, down goes cash for $400. Now you need to take your running total and subtract whatever you just paid for advertising. 22,980 is what I have in my new as my new cash balance. I'm going to shut this ledger and go back up and put in my account numbers. Now, miscellaneous is 59 and cash is 11. Okay, we're ready for our next entry. Okay, this is going to be July 12th. Okay, we're paid office station for part of the debt incurred on July 5th, and they're paying $5,200. So they're paying $5,200 on an amount we owe to office station of $6,500. So accounts payable, let's look at that one. Accounts payable is when we bought that whatever we bought, office station company. So we're going to make a payment to them. So down goes cash for $5,200. This is number 8. And what we're going to debit is accounts payable, number 8. And it is $5,200. All right, so we have accounts payable going down because we're paying some of it. $5,200, and cash is going to go down. $5,200. Now let's post. Let's go to accounts payable. Okay, I always go to my debit account first and then the credit accounts. All right, so this is going to be July 12th. Well, I'm glad I have that ruler there. I can just look right at it. Page 1 still of the general journal. Now we're going to make this go down. So 5,200. Now I have to subtract. So I have an existing balance that we're paying down 5,200. So now we have 1,300 remaining on accounts payable. Now we need to credit cash for the payment that we made on July 12th, page 1. We are paying $5,200. So now a new balance in cash, $22,980 minus 5,200 is $17,780. Okay, that's the new balance in cash. So if you're following along, that one should be on line 7. Okay, accounts payable, just to double check what we just did, you should only have 2 in here, and that's all we're going to do there, it looks like. And then back up here to post the account numbers, and you should be on lines 18 and 19, I think. Yep. 18 and 19 for that last entry. So be careful. Okay, 21 and cash is number 11. Okay, we have another July 12th. Okay, this time, see how I typed it wrong? And now it's going to fuss at me. Yep, so July 12th. Okay, recorded services provided on account for the period July 1st through the 12th, $13,300. Okay, the other thing, well, I'm just trying to give you some tricks to improve your accuracy because I've made so many mistakes over the years. I've also got a highlighter. So every time I put in an amount, I'm going to highlight the amount on my printout so that hopefully I'm paying better attention to the amounts of each transaction. Okay, we're now at the record services provided on account for the first part of July, $13,300. All right. So they're not paying us, but they are causing accounts receivable to go up. So I'm going to put that amount here, $13,300. Now I've already got a 3 here, but what I'm going to do is space and put number 9 next to it. Okay, 3 goes with cash and 9 goes with accounts receivable. When we record that we've done a job and our customers haven't paid us yet, we're going to create an invoice for our customers and put that amount in accounts receivable. And then we're going to go to the revenue account. Okay, so the revenue account should be on the second tab. It's called fees earned. The amount is $13,300. Now we're ready to make the journal entry. So accounts receivable. Okay, 13,300 and fees earned. 13,300. Now let's post. Let's go down to accounts receivable. And this is going to be a debit to accounts receivable. So we should already have 2 in there. This is going to be July 12th, page 1 still. We're going to make accounts receivable go up. Okay, and now we're going to add to what we have there. Okay, so now I have a new balance in accounts receivable of $19,100. I'm going to close accounts receivable, go down to fees earned. This is our first fees earned ledger entry, and this is July 12th. From page 1 of the general journal, go to the credit column and go to the credit column for the balance. Close it. Okay, now go back up and fees earned is number 51 and accounts receivable is number 12. So now we're sending the signal that we're finished with that entry. Okay, so this is 4-1. And now we're on our last entry for page 1 of the journal. So you should have 2 left when you're getting ready to do this one. Our new date is July 14th. It says paid receptionist for 2 weeks salary, $1,750. Okay, so we're going to pay. Okay, we're going to pay something here. Let me move this over. There we go. So sometimes it's easy to put it in the cash account. So this is actually cash going down, 1750. And that is actually number 10. And we're going to put that in a salaries expense, okay? Because salaries expense, because we're paying her right now, I guess. Today must be payday. So let's go to salary expense, which is going to get the debit of 1750. Now I forgot to put this in. Hang on a minute. So we just earned fees on the 12th. And so there we go. So that's got two numbers in it side by side, but that's okay. So we got 12 and 14. Let me just go down one. I know, just a second. I'm going to go down one. Okay, this came from 9. Yep. And this is going to be number 10. Okay, so 10, salary expense, 1750. If we go up to the cash account on the other page, then we're going to make, number 10. Okay, let me go ahead and I did put 9 there. All right. And did I put 9 in? Yes. All right. So we're good there. I just want to make sure. All right. So what are we doing? We are paying the receptionist. So we're going to use salary expense. Okay. And 1750 and down goes cash. Okay. And now we're going to post. Okay. Now we're going to post. So let's go down to the salary expense account. This should be our first entry. This is going to be July 14th, page 1, 1750. The new balance is 1750. And then we go to cash and make cash go down on July 14th, page 1, 1750. Now I've got to subtract. I had 17,780 and I'm subtracting 1750. The new balance in cash is $16,030. Close the account. Okay. Go back up here to put the account numbers in as your reference. So supplies expense is a 51 and cash is 11. Now we have just completed general journal page 1. Okay. We're getting ready now to use general journal page 2. Okay, so you should have all these on here just like this. And I'm going to check it and make sure that I have not miskeyed something. I'm looking for red, something red. If I see something red, then I probably need to fix it. You might also go down and look at your ledger. Okay, your ledger should show, watch it now, cash. You should be filled out something through line 8. Okay, accounts receivable, line 3. 1 in supplies, 1 in prepaid rent, 1 in prepaid insurance. Now you say, what are these red things for? Well, I'm not finished yet. So the ledger sometimes is a little harder to read. But if we had something wrong, I don't think we would get these green check marks. So we're looking for mainly green check marks right now. Okay, so take a look. Take a look. Because that's all we're working on right now is the transactions. And now we're ready to close. Let's close all of our ledgers just so that we don't mess up something. So if I click, if you click on cash, all of those ledgers will now close. Okay, now we're ready to journalize again. Ready for another journal entry. Okay, so this is going to be page 2. Yep, page 2, there it is. Okay, so this is going to be July 17th. It says recorded cash from cash clients for fees earned during the period July 1st through the 17th. So this is cash paying clients at the point of sale. Okay, we do not put it in accounts receivable because they're paying us now. Why? They're paying us for fees earned of $94.50. Now you go check your number. I forgot my first step, guys. Yep, I was getting too excited. So let me go back. Okay, cash is coming in, and this is number 11. Remember, I said we have 20 transactions. So I have actually numbered them on the printout that I created when I printed the directions. Okay, maybe it's 21. Maybe I miscounted. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. I stand corrected. 21 transactions. So sorry about that. Okay, so at least we checked it. Okay. Once again, we're recording the cash, so we've already got it. Now let's go post to the ledger. Let's go to the cash account. Now we want July 17th, page 2. Okay, and it's making cash go up. And I need a new balance. So I'm going to add to the balance that I have there. So we got $25,480. Close cash. Go to fees earned. Put July 17th in. So page 2. This is going to be $9,450. Now I need to add that. And I need to add to the balance. Make sure it's credit. Okay, 9450 equals 22,750. So I believe that's good. Now we're going to go post with the account numbers. Post with the account numbers. So cash is 11. Fees earned is 41. Okay, now we're ready for our next date. The date is July 18th. Okay, July 18th, we're going to pay cash for supplies. July 18th. Okay, and this is number 12. So pay cash for supplies. Down goes cash for $600. And this is number 12. What did we buy? We bought supplies. So I'm going to put 600 in, and this is number 12. So you would go and find, oh, there's number 12, and there's number 12. Okay, so we got supplies of $600, and we spent cash of $600. Now let's go post. Let's go to supplies in the ledger. This is July 18th, page 2. Up goes supplies, and now we have $3,700 in supplies. Close. Go to cash. We should be on line 10. Line 10, July 18th, page 2. So down goes cash, $600. So now I need a new running balance for cash, $600. So $24,880 is the new balance after that transaction. Okay, so now we want to close cash and go up and put their account numbers in. All right, so supplies, I think we've got it up here. Supplies is 14, cash is 11. Okay, so there's number 12. Let's get ready for our new date. Our new date is July 20th. Okay, it says recorded services on account for the period, the last part or July 13th through the 20th. So these are recorded services provided on account, 6750. Okay, 6750. So up goes accounts receivable. How much? 6750. And I'm going to put the transaction number 13. Okay, and now we need to go to fees earned. I'm going to jump down 6750, and that's coming from number 12. So we're going to debit accounts receivable. Got to spell receivable correctly or it'll fuss at you. So 6750, and then fees earned 6750. Now we're ready to post. Go to accounts receivable. Accounts receivable. All right. The date is July the 20th, page 2. We're making accounts receivable go up. So we have to add to the amount that's sitting there, $25,850. We're going to close it and go to fees earned. Fees earned is the revenue account. We should have the third revenue entry on line 3 coming from General Journal page 2. And we're going to credit 6750. So now we have a running balance. So we take the balance we just calculated and add the new amount to it. I got 29,500. Going to close it. Time for account numbers. Okay, time for account numbers. So we're looking at 12 and 41. Now we're ready for a new date. So it is July 24th. Oops. Okay, July 24th. All right, so now let's evaluate what we're doing. Recorded cash from cash clients for fees earned for the period of July 17th to the 24th. This is not accounts receivable clients paying in. This is just a cash sale. Cash sale at the point that they make the sale, they're paying the cash. So cash is going to go up. Okay, and this is number 14. Okay, all right, so the cash goes up by $4,500. All right, and that means that fees earned goes up $4,500. And that is number 14. Okay, so cash is coming in, $4,500. Fees earned, $4,500. Let's go to the ledger. Okay, so cash gets opened up. This is on line 11. So this is July 24th, page 2. We're getting the cash. So we're going to add 4,500 to the running total. Okay, I got 29,380. Okay, let's close the cash. Let's open fees earned. Okay, it is July 24th, page 2. We're crediting fees earned for 4,500, and now this is the fourth amount in fees earned. Fourth. Okay, what am I missing? I missed July 17th. 94. So I missed 94. So hang on a minute. Let's see. I want my T account to agree. Okay, so I really need to go back track and get that. So 94.50 actually came from the 17th, which is number 11. Okay, so I got that. And I can't remember if I put that in accounts receivable or not. Number 11. Doesn't look like I did. Sorry, guys. Wow. All right, 11. So, nope, that's cash. Sorry about that. Cash went up. Okay, let me just double check. Yeah, recorded cash from cash clients for fees earned during the period. So I need to move this one down because I don't have an 11 here. So let me just move this. Now we'll put 11 in. So it is always good to check and keep things agreeing with each other. Okay, now I do want to check my cash. I'm going to check my cash. Yep. So how many do I have in cash? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. That's 5 causing cash to go up. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. 6 causing cash to go down. I want to keep these in agreement with what I have here. Okay, in case something goes astray, then I can check it. All right, so now we're ready to put in the account numbers to show that we did post it. So that is 11 and 41. Okay, we're ready for July 26th. July 26th, it says received cash from clients on account. So cash is going up. And this is number 15. It's going up $12,000 because accounts receivable will be going down $12,000 because clients are paying us down on their account. Okay. It says received cash from clients on account. They have to tell you that. Okay. So here comes the cash for $12,000 and we got to send a reduction or a credit to accounts receivable because that's going down. And I didn't mean to put that 11 there yet. That's after we post. Yep. All right. So now let's post to cash. So this is going to be in addition to, looks like we're looking at line, come on in. We're looking at line 12. So this is July 26th, page 2. Up goes cash, $12,000. So now I'm going to add $12,000 to my total. Okay, 29,380. I now have 41,380 in cash on line 12 as of July 26th. Close it. Now go to accounts receivable. July 26th, page 2. We're going to make accounts receivable go down $12,000. So we need a new balance in the accounts receivable. We've got 13,850 if my calculations are correct. Close it, go back up and put in their account numbers. Oh, I don't have that on for you. I guess I didn't, since I didn't have anybody here, I was like, well, okay, so now I do. All right, so we posted this. And the ledger account number 11 and 12, okay? Our next transaction number is number 16 on July 27th. So July 27th. Okay, let's analyze it here. So we are going to pay the receptionist again. Okay, the receptionist again. This is July 27th. So 2 weeks worth of salary goes into an expense account called salaries expense. And I want to put that is number 16. Okay, 1750 again, and then down goes cash because we're paying her the cash today. So down goes cash right here, number 16. And that's 1750. All right. So let's go ahead and put this in. Salary expense 1750 and cash goes down 1750 for paying her. Okay, we are ready now to post to our journal. So let's go to salary expense. Salary expense, not supplies expense. Put in the date, July 27th, page 2, 1750. Now we have $1,750 in there twice. So it should be $3,500 in the balance of salary expense, $3,500. Close salary expense, go to cash. This should be on line 13, July 27th, page 2 of the journal, right? And we're paying, so we're going to make cash go down. So we take the running total that we have there and subtract 1,750. Okay, so we should have 39,630. And we're going to close the cash ledger. Now go back up to the journal entry on page 2. Okay, and salary expense, we've already used it, number 51. Okay, 51, and of course we know that cash is number 11. Gosh, we've used that a lot. Okay, next date. Next date is July the 29th. We're going to pay a phone bill. Now, we do not have a utilities expense account, which is kind of odd. So if you don't have a utilities expense account, you just put it in miscellaneous. So July 29th, we are paying a phone bill. Phone bill. So you need to go to your second set of T accounts. And we're going to go to miscellaneous, which is the last account. This is going to be transaction 17. So we're paying a phone bill of $375, and that's going to go down in cash. Okay, so go to your cash account, make it go down $375. This is transaction number 17. Okay, transaction number 17. And we already did the miscellaneous. All right, so let's post, right? I'm going to do my cash one first. Cash is the credit for $375. That's fine. And then miscellaneous, if you don't want to spell it, we've already got it put in up here. So let's put miscellaneous for the telephone bill. Whoop. There we go. And it's $375. Now let's go post. Let's go post to miscellaneous expense down at the bottom. This will be the second entry. This is coming from the date July 29th. Okay, page 2 of the journal. And $375 is the amount of the telephone bill. I might put the word telephone there if I was really doing this for somebody, just so they knew what we were paying for out of miscellaneous. That's an advertising bill, but nobody knows. Nobody knows that because we didn't put anything. They didn't tell us to. And then when we paid this, cash is going down. So this should be line 14 for cash. July 29th, page 2, down goes cash, $375. So now I'm going to subtract $375 from my balance, $39,255. Okay, that is posting that to the ledger. Let's put in the account numbers to show we're posting to the ledger the way we're expected to. New date. This is July 31st. Now, all of the dates from this point on should be July 31st because now we're at the year end. Here's what it says. It says we're going to pay an electricity bill for July of $675. Well, just like we paid the phone bill, the electric bill is going to go in miscellaneous. Now, that's not normally common. Usually a business has a utilities expense account. Then that's got to come out of cash. Okay, so cash gets a credit. And this is transaction number 18. Okay, 675, number 18. Boy, I barely had room to put that in. Okay, now let's put that in the journal. Okay, the journal. So miscellaneous again. So we're going to borrow this account here and copy it and bring it in. Okay, don't put the number there until we post it. So 65,000 goes into the miscellaneous expense, down goes cash. Cash sure is busy in this problem. Let's go to miscellaneous and put in the 675. Okay, in 675 or in miscellaneous, this is July 31st, page 2 of the journal, 675. Oop, I forgot to carry a balance from before. Sorry about that. So 403.75 is 775. And then to add 675 is 1450. So sorry I did not do the balance as I should, but you can catch things as you go, right? Catch things as you go. I'm checking my work, by the way, just to see if I see any red X's. If I see any red X's, check my work. Okay, we're not finished with this journal. When we're finished with the journal, we'll check our work again. Okay, now we're going to put in the post references. So miscellaneous is 59 and cash is 11. Okay, July 31st now. We're almost to the end. We are at the end of the month. Okay, are at the end of the month. Recorded cash from cash clients for fees earned for the period. Ooh. So cash is going up for cash sales. Cash is going up for cash sales. This is number 19. Okay, $5,000. And why are we getting the 5,000? We are doing the revenue. So this is $5,000 and this is number 19. So you should have 5 entries for fees earned when we get finished with this one. So here comes the cash of 5,000 and we're going to record the fees earned as a credit. Okay, let's go to cash. And I left cash open, which I discourage you from doing that because sometimes you end up putting in an entry in the wrong count. All right, so this is number 2. It's going to make cash go down or up, up by $5,000. So we need to add $5,000 to our total that we're keeping. Okay, so I'm going to add that together. I got 44,255 after that debit of cash on line 15. Okay, now we want to go to fees earned. Okay, fees earned. This is the last, so we have 4 prior to now. So let's put July 31st, page 2. So far, we've only had credits to the revenue account. I forgot to do the balance from the last time. So let me fix it. 29,500 plus 4,500 plus, okay, that is $34,000. Now I'm going to add 3,000 to that number. So it's 37,000. Okay, let's close our fees earned. We've got cash closed. Now we're going to put in the account numbers. So cash and 41 is fees earned. July 31st again. July 31st. This is the 20th transaction. So we've got 2 more to go. So if you got 2 more to go of your transactions, you should be on line 19. Okay, because there's going to be 2 for this one and 2 for this one. Okay, so if you don't have, if you've missed a line, then you're going to need to go up and move things around so that you get everything on the right line. All right, so this is recorded services provided for the remainder of July, $3,000. So we did jobs for a client that we are now sending an invoice. Okay, I have one spot here for number 20 next to this. Okay, hang on, I'll just widen this a little bit. Number 20. So it looks like it's $3,000 on account. So then we want to go to the 3,000, we want to go to fees earned. Here is the entry for the 20th entry. So now we have 1, 2, 3, 4, 5, 6 fees earned lines. All right, so accounts receivable, okay, $3,000, and fees earned, $3,000. Let's go down to the ledger. Okay, we're going down to accounts receivable. Open accounts receivable ledger. This should be your last line of accounts receivable. Put July 31st, page 2, and we're putting some, yes, we're putting some in here. So 3,000, we're going to add 3,000 to the remaining balance. So I got 16,850. Okay, just for fun, because my brain is starting to get a little mushy, I'm going to add that together. Yes, 16,850, just fine. All right, now let's go down to fees earned. Okay, fees earned. This should be the number 6, line 6, July 31st, page 2, $3,000, and we add $3,000 to the total. So now you should have, I have 40,000 in fees earned. Now I'm ready to put in the account numbers to show that I have posted. So accounts receivable is 12 and fees earned is 41. Okay, last one of the transactions. Okay, now this is transaction number 25. Okay, transaction number 25. All right. So we're going to pay dividends. Pay dividends, and these are cash dividends. Okay, so cash is going to go down. When you pay dividends, cash goes down. So let's make cash go down here. And we paid $12,500 of dividends. So let's see, do we have a dividend account? Should be up here, yes. So when we credit cash, we credit the dividends account. So this is number 21, $12,500. So we're paying it out in a check to the different shareholders that receive the dividends. Okay, so then we want dividends, and that is, we'll come back to that number. Okay, that's $12,500, and down goes cash. These are cash dividends. Okay, so now let's go to the dividend account. So there it is. This is our first entry. This is July 31st. So we're paying it. We're recording that we're paying $12,500 of dividends. So make that the new debit balance. Okay, and then cash is really busy. Here's one more. Okay, July 31st, page 2. We're going to make, no, yes, we're paying dividends. Yes, we're paying dividends. So $12,500. So it looks like we have another line yet for cash, which concerns me just a little bit but we'll go back and audit it. All right, we'll go back and audit it. So real quick before we move on. Okay, and we can check our work. That's fine. Let's check our work. So cash went down. Nope. Let's finish our journal entry by putting in. Now, according to this one, we're finished with general journal page 2. So dividends is 33. Let's see, dividends. Dividends is 33. Okay. 33 and cash is 11. Okay, I'm going to hit check my work. And we're going to start looking for anything that's red. I don't think you'll get your green check marks until you have something filled in for every place. Okay, I think that's how it works. So you might want to take a few minutes. The points for this, okay, aren't complete yet. So I don't know. I'd have to look. Oh, 79 out of 79, 77 out of 77. So that means we did it all. Okay. So now let's go down here to the ledgers. Okay, let's see if, looky there. Looky there. Yep, I've got a balance that needs to be recalculated. So that's not good. Okay, so if I take 39,255 and I have to remember, okay, so that is $5,000. Okay, now let me look at my T account. Okay, I'm going to see because I may have put something in my T account that I forgot to put in here. Okay, so I'm just going to audit this. I got 14, 6, 46, 20, 5,000, 15,000, 400, 5,200, 1,750, 600, 94.50. Be careful. 94.50, 17.50. Okay, 4,500, 12,000, 375. I'm missing a 675. That's what I'm missing. All right, hang on a minute. So let me fix this. I told you I was worried that we had one left over here. So this is how you do it. Okay, you put this in 675 because that should have been right after we paid the phone bill and then we paid the electric bill. All right, so I need to recalculate this, and then I'm going to move this down, okay? So I don't want to lose what I just did. Okay, so that is okay there. All right, and then that's okay there. The one in between is the $5,000 that we got from the clients, and that causes cash to go up. There we go. So now let's take 39,255 and subtract 675. Okay. So, yep, that's why having the T account does help because at least you've got something to refer to. I'm not saying you couldn't make a mistake in it too, because you can. All right. And then we want to add 5,000 to that, 43,580, and then subtract for the dividends that we paid. I got $31,080. Okay, let's check our work now. Okay, I think we did okay there. So we're back in business for cash. Let's look at accounts receivable. I think we're okay there. Supplies, something's missing. I think it's probably an adjusting entry. Okay. Prepaid rent probably has an adjusting entry. Prepaid insurance will have an adjusting entry. Accumulated depreciation will have an adjusting entry. Unearned fees will have an adjusting entry. So will salaries payable. Okay. Common stock, we did fine there. We only have one there. We don't worry about retained earnings yet. It's not time for that one. Dividends, we recorded those for 12,500. Here is another mistake that I made. Yep. Was my balance in my fees earned. So I'm going to audit my T account for fees earned just to see what I got here. So 1, 2, 3, 4, 5, 6. Okay, so 6, but I just didn't calculate the running total correctly. Let's get that done. Okay, let's get this done. All right, so 34,000 plus 5,000 is 39,000. And then another 3,000 is 42,000. Okay, and it looks like we've got a couple more to go. And remember, fees earned will be closed. So will all these expenses. They will be closed. Okay, so we're not really surprised that we're not quite done yet, because we have to do adjusting entries and then we have to do closing entries too. Okay, so I think, let's check one more time. Let's check the work and see if I'm getting any red X's. Don't be alarmed at these red triangles here because we're not done yet. But when you are done, you should see, I'll show you what I mean by done. You should see 77 out of 77 when it comes to your first page of your general journal. Okay. I'm sorry, second page of your general journal is 77 out of 7. The first page of your general journal should be 79 out of 79 when you've got everything in there correctly. Okay, so what I'm going to do is leave this journal open, and I'm just going to close my T accounts, and I'm going to open up the spreadsheet that I provided you. All right, so give me just a second and I'll open that up. This is the end of period spreadsheet. End of period spreadsheet. And we're going to enter everything in the adjusted trial balance. So I'm going to try to scoot it over here. And then we want no, I don't want another one. Okay, so we have to be very careful here. This is where keying tends to cause problems. We want to key in to this spreadsheet. Now, you can print this spreadsheet and write them in if you want to. Okay, if you want to, you can do that. But I'm going to use the power of Excel to help me out here. All right, so the first one we want is, let's open up all of our ledgers. Okay, let's open up our ledgers to where we can see all of the ledgers and their balances. Okay, because I don't think we can see the balances when they're closed. I don't think so. Let me see. I don't think so. I wish it would show it. We are looking for the balance in our ledgers, right? So you might as well open them all. So go ahead and click on cash. No. Check my work. Check my work will open all of your ledgers. Okay, so you don't have to go down there and make every ledger open. Here's what you have to be careful about. We are going to key in. I don't like doing this, but we're going to do it. All right, 31,080 is my cash balance. Okay, when I am finished with a ledger, I'm going to close it. I'm just going to open each one because I don't want to get confused with the totals and where they go. So now my accounts receivable has 16,850. Close it. My supplies has 3,700 in. You say, but there's still a line. Yes, we're going to use a line in supplies for an adjustment. Same with prepaid rent. Prepaid rent has 6,000 in it. Okay, prepaid insurance has 4620. I just about said the wrong 4620. Don't misread it. Office equipment 13,500. Accumulated depreciation, be careful, go back across. Have we done anything in accumulated depreciation? No, but I'm going to put a 0 there. Okay, I'm going to put a 0 there to show that I looked for that. Now let's go to accounts payable. It has 1,300. Make sure it's on the credit side. Okay, salaries payable, nothing yet. There will probably be something from an adjusting entry. Unearned fees has 5,000 in it. with a line missing. So, okay, more than likely it's going to have something from an adjustment. Common stock is what the owner owns. That's the owner's investment in the business, $44,900. Retained earnings doesn't have anything in it because this is the first month of business. Dividends is going to have a debit balance before. This is the unadjusted. Okay, unadjusted. There's another line missing from dividends because that will get closed. Okay, that will get closed. Now we're going to look at fees earned. Fees earned. I got 42,000 on the credit side. And now I'm going to jump back across because all of the expenses will have a debit balance. We do have a debit balance of 3,500 in salary expense. I don't think we have anything in rent expense yet, but we probably will after an adjusting entry. Supplies expense, I don't think we have anything. But we have to have these accounts in order to do an adjustment. I don't think we have any in depreciation expense. Okay, I don't think we have any in insurance expense, but we do have in miscellaneous. So nothing in depreciation, nothing in insurance, but we do have miscellaneous, right? We've got advertising, the phone bill, and the electricity, I believe. So this one's got 1450 in it. Now, here comes the moment of truth. The moment of truth. This is the unadjusted trial balance. So we're going to add up everything we have, and if it's right, it will balance with what we have on the credit side. Now, I'll tell you, oftentimes doing the credit side first helps, but either way, we want the debits added up and the credits added up. And if we did the magic of accounting right, then it should balance. Hey, it balances. Woo! All right, I'm going to stop this video for now because we've got to the unadjusted trial balance portion. And I know we've already used up quite a bit of time. So I'm going to continue on with this in another video from the unadjusted trial balance part. If you do not balance, you need to go back and see why not. Okay. Now, you should probably have zeros where I have zeros, I'm guessing. But you're going to have different amounts because you're going to get a different version of this project. Okay, so I'm going to stop the meeting for now. Stop. And